is our first ever, what we're calling the McGuire iQ&A, and it's a chance where we're bringing back our alums and or stakeholders at the McGuire Center, and a chance for students to interact with them in their area of expertise, get information, motivation, and it's designed to be an interactive environment where you can, today our guest is Michael Beer, and he'll tell you a little bit about himself, but we're thankful that you're here and grateful, and please interact with us via the chat room, and I'm sure you heard John say he'll throw out the questions and then go ahead and unmute and we'll have a dialogue. So before we get to Michael, I'd like to have Alyssa Billfield, the interim director of the center, just say a couple words.
Thanks so much, Tad. And for everyone who's joining us today, we're so excited to be hosting this very first session. As all of you know, we've kind of entered into this brave new world, and that's actually allowed some really positive unintended consequences. And one of those is that we have the opportunity to convene folks from all across the country who are associated with the McGuire Center, including students and alumni. So we're really excited about this opportunity. And we want you to know that this will be one in a series of iQ&As. So we look forward to seeing you at some of the other events as well. And we're really excited, especially to have an alumni of the McGuire Center New Venture Development Program here today to talk about his experience at the U of A, but most importantly as an entrepreneur beyond that. In talking with Michael, I've learned a lot about some of his bootstrapping strategies and techniques, which certainly pertain to all of your current work and future work as entrepreneurs. So it'll be really exciting to hear from him today. And so with that, I'd love to pass it on to John Sharp, who is the lead of our mentor team in the New Venture Development Program. John has had the opportunity to see Luminar firsthand, which is the current business that Michael's involved with. And so he's going to give a more robust introduction of Michael, and then we'll take it away hearing directly from Michael about his story.
Yeah, thanks, Alyssa. Yeah, so in spring of 2019, we took 30 students to Silicon Valley, and actually one of the first things we did was visit Luminar Technologies. That was your corporate headquarters, Michael, is that correct?
That's right.
Yeah, and it was incredible. They had this totally tricked out Chrysler Town and Country, I think it was, in the parking lot, all black rims, and it had the whole Luminar LiDAR technology on top with this giant video screen showing what the car was seeing. And then we also got to go, I don't know how you describe that, Michael, it was like a trailer that was loaded up with tech and a sitting room where we got to watch this really cool video of how the technology works. And it was spectacular. The students really loved it. And Michael gave a talk, and I think we talked a lot about funding. We talked a lot about the kind of growth of Luminar over time. And maybe you can comment a little bit about what it was like to have the students with you.
I don't know about the one on the blanket.
So, Michael.
Yeah, no, fantastic. And thank you guys so much for the invitation. It's an honor and privilege to be here with you. It doesn't feel like it was that long ago when I was frankly sitting in those seats and in those classes. In my head and in my heart, I'm still very much 22 years old, but my back and knees tell a decidedly different story, I can assure you. And it's just been a wonderful journey, and much of my modest professional success is largely in part because of my experience at the McGuire Center. And so I'm more than happy to come back, and I hope, and it would implore each of you to do the same, you know, down the path as you achieve, you know, your most certain corporate and professional success. So again, it's been just a wild journey. I have a handful of slides that I was going to go through, some of which touch on my background. More than happy to address any of those sort of points. And I can also kind of walk you through the decisions that I made along my professional journey, taking me to Luminar Technologies, where we are today, and you know, frankly, how I'm thinking about the world and early stage investing going forward. You know, they say no man crosses the same river twice, and so every time you get involved with a new startup or a new vertical or what have you, you approach that with new eyes and hopefully a little bit more experience. And I have hopefully tried to leverage a very diverse bit of background and experience over the years, everything from trading FX in New York to equity research, focusing on energy and transportation and so forth. Studied abroad in the UK, lived in Hong Kong and Singapore for 7 years, took Indian Airlines public and everything in between. And it's just been a ton of fun. And every single bit of that experience has provided dramatic and substantial insight into decisions that I make on a daily basis here today. So I would just implore each of you to certainly broaden your horizons, do as much as possible, build out that foundation, enjoy a variety of diverse experiences, because you never know when you'll be able to kind of leverage that and piggyback off of that. So let me pull up just a handful of slides, and I saw that John had shared a little bit of my bio. I think you need to enable my screen share.
Let me check.
I think I just made you a co-host.
Yeah, you're
great.
co-host.
Excellent. Are you able to see?
We can see it. The one.
And just let me remind our audience that you can type into the chat window and any questions that you have for Michael as he's going along, and I'll let him know.
Great.
We just lost the.
There we go.
How's that?
Perfect.
Excellent. Okay, so a little bit of background. Clearly a proud alumni of the University of Arizona and the McGuire Entrepreneurship program. It really is a first-rate program, and it is a capstone for any graduating student at the University of Arizona. Highly selective. I'm still in contact and friends with the vast majority of the folks in my program. I just got off the phone with 2 of them earlier this morning that are going to co-invest in an interesting startup with me. So, you know, these are friends that you will have for life. And it's just been fantastic and truly rewarding. It tends to be the best and the brightest that after 4 years start to gravitate towards one another because of a common interest, and really take advantage of that, because again, these are people that I hold near and dear to my heart. I, like most of you, I think, although nobody talks about it, did take at least one course at Pima Community College, so I'd be remiss if I didn't include that here on the bio. And then again, studied abroad at Cambridge overseas, and have done executive certificate programs at INSEAD and an executive MBA at Wharton. In terms of professional, following graduation, I took a role with Goldman Sachs in New York City. Left there shortly thereafter for a really fascinating role at a company called Benchmark, covering the energy space. So I was a research analyst covering oil and gas, refining, things of that nature. Everything from ExxonMobil and Chevron to Encana and some of the exploration and production companies in that sector. From there, I moved on to Bear Stearns, in which I covered the railroad and transportation space, including all of the major U.S. rails, FedEx, UPS, trucking companies, air freight and logistics. Clearly, every single one of these businesses have unique dynamics, and I'll go into that in a little bit. Unfortunately, Bear Stearns collapsed in 2008 as part of the global financial crisis. More than a handful of lessons learned there, and my entire team basically set out and started Wolf Research. So led by Mr. Ed Wolf, 6 of us basically rented office space across the street, and before you know it, we were sitting in a room that was 20 by 20, launching an equity research boutique, and thankfully we were able to piggyback off of our reputation at Bear Stearns and bring a number of client relationships along with us. After doing that for a handful of years, Citigroup hired me to lead their transportation effort in Hong Kong. So I moved to Hong Kong in 2010 and spent time in Hong Kong looking at, frankly, the entire region. So I covered all of the airline, shipping, associated infrastructure, lodging, and so forth in Hong Kong, all of Southeast Asia, India, and then, of course, partnered with my colleagues in Japan, Korea, and Australia. But it was really an international and a global role, and that's what I love about it. And that's what I love about things like transportation and energy. It is a global business. From Citigroup, decided I'd had enough of public markets, and I pivoted into the private space and back into a startup Luminar Technologies, while now a 350-person company that just announced its IPO, we'll be closing that probably in the next couple of months here. You know, when I started out, we were in a hacker house in Portola Valley here in Silicon Valley. So, you know, it's pretty fun to see a company in 3.5 years go from hacker house to IPO, and being an instrumental part in raising what is, I guess, resulted in about $850 million in capital that I chiefly led the effort on. In terms of what I did during the McGuire program, I can't say that it was terribly successful, but there were a lot of lessons learned. And frankly, I think that's what's important here. We had, I think like most of you, presented an initial business idea. At the time, the program was looking for more scalable businesses. Ours was a little bit more boutique-y, and frankly, they passed on our idea, right? So a little bit of disappointment right out of the gate, and instead they sort of pivoted us and pointed us in the direction of leveraging a technology that was developed there at the university. You can see the name of the individual that holds the patent, and basically it was part of the tech transfer process. And so at that stage, we basically took his patented technology and we tried to commercialize it. We went through the exact same process that you're doing there today. Everything from just understanding the marketing, the financial plan, you know, building a management team, understanding the forecasts, understanding the go-to-market strategy, all of those core foundational building blocks. I mean, nothing has changed in a couple thousand years, quite frankly. And so we went through the exact same process that you've gone through today. And I actually was able to find my old report in my email and pulled up just a handful of images. It's funny, I haven't seen these in about 15 years. So I got a kick out of it. You know, clearly I had very few interests in going into the gardening space, but that wasn't really the point. It was all about just the process. And frankly, business is business, and just understanding at its most fundamental level, you know, how to just think about a good opportunity and what the returns on investment are and so forth. That doesn't really change, regardless of how you're sort of thinking about your particular idea. And so just going through that process that got me really excited about, you know, having skin in the game, building something for myself, taking an active role and a bit of ownership in terms of, you know, determining my own professional success. So as I mentioned, clearly was never going to go into the gardening space, or frankly, even into the consumer goods space. And so following graduation, I then started focusing on areas that I had a little bit more interest in, which really are energy, transportation, things of that nature. And so over the course of my 15-year career within investment banking and equity research, you know, covered a number of sectors and an even larger number of companies within those sectors. And each one of these sectors and companies have their own dynamics, but it just gets down to understanding the whys and wherefores. What makes the company tick? What drives the stock price? And frankly, in a lot of ways, many companies are the same, and yet everyone is unique in its own way. And so, you know, for any of you that have interest in public markets, you know, you can do your own research, you can form your own thesis, and frankly, it's pretty rewarding type work. So again, as I mentioned, cover everything from energy, transportation, automotive, and then in Asia, much more on the aviation and lodging side. And so, you know, after 15 years of covering public markets, I wanted to spend a little bit more time on the private side. You know, public markets are known to be exceptionally efficient, right? All of the known knowns in the universe are supposedly embedded into the stock price at any point in time. And, you know, asymmetric information is where one can get a real advantage. Unfortunately, public markets frown upon that. And so you have to kind of look to more private markets if you want to benefit from some of that asymmetric information and having unique participation earlier in the growth curve. Towards the end of my time there in Asia, had led a number of IPOs, you know, raising upwards of $2.5 billion or so. Everything from Melco Crown in the Philippines, Carry Logistics in Hong Kong and China, Bangkok Airways. If any of you have been to Koh Samui, Indigo Airlines, the largest Indian airline, and then Bank of China Aviation, which was the first large Asian aircraft leasing company. So had a lot of fun. Realized that I really enjoyed the capital formation side. So in addition to just looking at companies, helping the management team arrive at a strategy and then going out and raising the capital to ensure that they can execute on that plan. And so from there, I began looking at, again, more and more in the private space. And so I pivoted to Luminar. I took a role here in 2017. And frankly, what became abundantly clear to me is that there's just so much cheap capital sloshing around. You can look at where the 10-year bond is trading today. There's just a lot of capital out there, quite frankly. There was a launch of these mega VC funds, think of SoftBank, where you've got tens of billions of dollars now being funneled into private ventures. In many ways, private markets are starting to look like public markets, where you have a secondary market for employee shares and so forth. There's also significant sovereign wealth participation, a number of listed market investors, hedge funds and so forth, who frankly want to gain exposure to certain thematics, whether it's autonomy or electrification or what have you, are going earlier. And the only way to do that is to invest either in a pre-IPO phase or even earlier, right? You start talking about Series A, B, C, D, and so forth. Furthermore, there's been an outright explosion in what we call CVC activity, corporate venture capital. This allows a big company like, say, a Corning or a Volvo or any of the above to gain access to unique ideas that are still in that sort of germination phase, where there could be some strategic overlay or some opportunity, and or maybe as a pre-M&A event where they get to know the companies quite well before, say, buying them outright. And then furthermore, as we would have seen during the last couple of months, there's massive subsidies in terms of government loans, SBA, and so forth. And I suspect that's something that you guys have talked about internally. I recall talking about some of the SBA loan opportunities even when I was there, and that was 20 years ago. Many folks are always interested in the ABCs of venture, and I would implore you to be really conversant with this sort of stuff. Nothing worse than getting caught in a conversation and not knowing sort of the basics. Everything from seed funding, Series A, B, and C. Not all of these are the same, but there are some rules of thumb to live by. Seed funding clearly can be friends and family. It could be your uncle throws in the first 100 grand and so forth, all the way up to some high net worth individuals that you may not know, angel networks, or even some funds that really do focus on seed funding. And generally those are, let's call it $1 million or below at a, let's call it $8 million type valuation. Series A is where you start getting into optimization and proof of concept. And clearly these Series A's have been getting larger over time. But historically Series A was, let's call it on average 13 million at a $20 to $30 million type valuation. Series B is where you start getting into the build phase. You've already proven out the concept. Now you're starting to kind of build out a little bit. You're having maybe your first commercial partnership and things of that nature. And people are able to raise, tens of millions of dollars at, let's call it a $60 million valuation on average. And then Series C is really for scale. You're now starting to scale up. You've now got revenue that you can set your watch to. You're able to bring in some outside talent and really start to build this thing out. And you as an executive, you're not doing everything, including janitorial work at this stage. You're now having some specialization of labor at the senior most levels within an organization. So this is clearly a framework. There are more exceptions than you can shake a stick at, but this is the way in which I think a lot of folks within the venture space sort of think about it. Other sort of tools of the trade, because investment is not all the same, and money is frankly not all the same color. Some of which is strategic in nature. Some folks choose to use convertible notes, which may be interest bearing or non-interest bearing, equity instruments, which today it looks like a loan, but there are a number of embedded features that allow you to kind of convert that into equity at some stage. This is very popular, as are safe notes. Safe notes didn't exist when I was there at McGuire, but safe notes have become tremendously useful. Y Combinator is a very well-known incubator here in the Valley. They sort of developed this. It's effectively a 3-page document that allows somebody to do a convertible note, but it's non-interest bearing. I give you $100,000, and when you do your next round of qualified funding, I will get an implied valuation and the number of shares associated at XYZ, and you would sort of pre-negotiate that. Quite frankly, here at Luminar, I think we've done more in safe notes than anybody else in the world combined. I think we did something like 150 million in safe notes early on, which is frankly unheard of, but it really worked for us. It doesn't work for everyone, but it's certainly something that we found quite successful. And then you get into venture debt and CapEx facilities. You don't just have to go to the Chase or the Wells Fargo across the street. There are a number of folks that do either CapEx facilities, in which you use the assets that you have bought or will be buying as collateral, or there could be a venture debt facility, which is a blanket loan that could use, you know, your overall company as a general lien. You know, that's another path as well. Now, debt often carries interest. There's warrants. You know, there's other ways in which folks gain, you know, equity upside type exposure by way of these debt facilities. And then you have your more traditional preferred equity. People talk about preferred equity and common equity. Remember, the definition of these for public markets is very different than for private markets and for private VC-backed companies. You know, when you look at General Electric, you know, trading on the trading on the New York Stock Exchange, you know, the vast majority of that is going to be common stock. Preferred stock typically implies some sort of a preferred dividend of sorts. Whereas for private companies in the venture space, you know, the vast majority of employees are common shareholders, and then preferred equity would be the outside capital that comes in. And typically preferred equity trades at some sort of a premium to where the common trades at. And there are a whole host of other nuanced implications as a result of that. Where are the stock options to employees granted and so forth, and who evaluates and values those? So there are a lot of kind of nuances there, but that's something to make sure that you're familiar with. And then, of course, as I mentioned, secondary equity, you know, as employees own the common equity at some stage, if there's no liquidity event, perhaps somebody comes in and actually looks to buy your common stock rather than investing in the preferred. So a lot of different ways for venture capitalists to gain exposure to your story. Again, preferred equity is generally going to be primary proceeds, which allow you to grow the business, whereas secondary is basically buying out existing shareholders. And so the company itself doesn't benefit from that increased capital, but rather it provides liquidity to employees. And that alone could be a retention tool to ensure that, you know, as your company is growing over the years, if an employee doesn't have the ability to sell his equity, it's really not worth much to him. So it can be a real retention tool as well. So within venture, again, big divide between early and late stage. And here I've shown really, you know, 20 of the top US venture capital firms, both those that focus on early stages as well as those that are a little bit more late stage. And you can see the early stage guys, you know, the average size of the investment as well as the average valuation. You know, clearly these early stage folks like to get a 10, 20, 30% interest in the company early on, whereas later stage, you know, while the check sizes tend to be larger and the valuations are substantially larger, the percentage of the company that they're effectively buying is substantially less. And with each successive, you know, series D, E, F, as you get into LMNOP, you know, the size of the raises tend to be much smaller as a percent of the overall company. Unless you're talking about companies like a SoftBank or somebody like that, where they're taking just substantial positions in the company and they have the balance sheet to do that. And then next, it's really as you start thinking about IPOs, I think most of us are familiar with the big headline IPOs today. Snowflake went public and it's already up, I think, 100%. You know, the Ubers and those big landmark IPOs, people tend to think of, you know, you have to be a unicorn in order to even contemplate an IPO. And frankly, that was not the case historically. And if you look back over the last 20 years, you know, you can see the average revenue and the average size of a traditional IPO. And, you know, the vast majority are not unicorns. In fact, many, even in the public markets, will never become a unicorn, will never reach that $1 billion type level. And you can just kind of see how this is tracked really over the last 20 years. The other thing I would highlight is the number of years, the median time to IPO. And you can see that historically, kind of into and just immediately following the tech bubble in the late 90s and early 2000s, you know, companies existed for 3 to 4 or 5 years. That was sort of the average. Now that's more like 6, 7, 8 years. And again, going back to one of the initial slides that we discussed, companies are able to stay private longer because there's just access to private capital and substantially larger pools of capital. And so there isn't as much of a rush. I would say that statement is now almost incorrect. This year, we have had a complete sea change in the way people are thinking about public and private markets. And once we sort of digested, you know, the initial impact of coronavirus in March, you've had this outright explosion in what I would call SPACs, or special purpose acquisition companies. And frankly, you know, just the sheer number and the amount of capital that is going into these SPACs is really tremendous. And it's something that you should be very aware of, because this is a term that's going to be bandied about quite a bit here in the near future, as well as I think longer term in the US and most likely internationally. So what is a SPAC? A special purpose acquisition company is a company that would frankly go out and raise, let's call it $200 million. And it would basically be a blank check. A number of investors would say, all right, you as a management company, you've got a great Rolodex, you've got a great track record. We're going to give you $200 million and we're going to give you 2 years to go out and find a really interesting company to invest in. So the clock starts and I'm out there and I'm looking for some potential targets. The goal is for me to find a company, invest the 200 million. Now I'm a listed shell company. So I've got this shell that's just trading, but the only asset that shell company owns today is that $200 million sitting in a savings account or an escrow account somewhere, trust account. Once I find my target company, I approach that company and say, listen, I'd like to invest my 200 million and here's what I think you're worth. And this would be the share of the company that I would in effect buy. This is effectively a reverse merger. So I would take my 200 million and just for effect, let's say I find a company that I think is worth $1 billion. I would be buying 20% of that company. And basically as part of that investment, we would also do a reverse merger in which that new target company basically becomes part of my SPAC, the listed entity. And so I basically absorbed them, but because they are the larger enterprise and the enterprise that will exist going forward, we changed the name of the company and changed the ticker, and now all of a sudden that entity is now a publicly listed company. So this is a backdoor way for a number of private companies to raise capital and to basically list without having to go through a very long and lengthy IPO type process. And so you've seen just an outright explosion in these number of SPACs, and I'll show a slide here on the next slide that shows that traction and a time series. But it also just provides substantial creativity. Right, everything from there's warrants that are embedded for the SPAC sponsor and the SPAC shareholders. There can be earnout structures that benefit existing shareholders. You have an opportunity to raise additional capital. In the example that I use, the 200 million, perhaps you want to add another 100 million associated with this reverse merger and backdoor listing. You can do that in what are generally called PIPEs or private investment in public equity. So there's a lot of different features and creative ways in which you can approach this because it's more or less a merger rather than an IPO. IPOs are heavily regulated and monitored and so forth. Because this is a merger, you can build in a number of other features. And more importantly, you can effectively communicate more of your message by way of your public filings as a result. When you talk about an IPO, you're really limited in the amount of information you can include in your public filings, whereas when it's a merger, the company acquiring the entity, it's right for us to disclose what are the future earning potential, what is the future story of that new merged entity. And so the ability to communicate more of that, more of the forecast information into the public forum, you clearly have an opportunity to tell your own story rather than relying on others to tell the story for you. And then here's a little bit of a time series just shows the outright explosion. So again, I started out this presentation talking about how there was this overwhelming interest in staying private. In some cases, it felt like forever. And now you have private companies where there's a lot of pent-up demand for exposure to the thematics that they're focusing on. And now this provides a really seamless way for a number of companies to list by way of SPAC. And you can see something like $39 billion has been raised in 2020. The average size is also increasing quite substantially if you look over the last 7 years or so. And then you can see current SPACs today, how many are out there seeking a target, how many have announced their business combination, and so forth. So it's something I want to kind of leave you with, just so that you're really conversant with all aspects of the capital markets and really what does it mean should you be tremendously successful in launching your own business, everything from seed all the way through to IPO, depending on how you want to approach that. So with that, I can kind of hand it back over to you guys for Q&A.
I had a question for you about your international experience. I was wondering, I'm looking at getting a work visa when I graduate from the master's program at U of A. Is it easier, you think, to apply for like a visa program, or do you think it's easier to go through a company that you already work for, and if they have an international office, seek that route? Yeah, I mean, when I lived in the UK during Arizona, I actually applied and got a work visa, and for like a summer job.
that's certainly quite easy. Unfortunately, when I entered the country, I don't think I got the right stamp. And so I had to like go to the Netherlands for a weekend and come back and get the right stamp at customs. But that's like one path. I think that's probably better suited for like, you know, getting a job at a local bar or an internship. When you start talking about big corporate roles, you know, if you don't have the right to work in certain countries, it's a huge challenge. And it's a big challenge for a lot of foreigners who are looking to work in the United States or stay in the United States after graduation. We deal with this a lot, you know, with our own employees, frankly. In terms of moving to Asia, you know, that was a very unique situation. I knew I wanted to live there and work there. I basically put together an interview schedule, flew over there, met with folks, really leveraged my Rolodex, and by the end of the 1 week period, I had a job offer and they sponsored me. Hong Kong is a bit of a unique place, as is Singapore. I think some of these other countries are much more protectionist, frankly, and less open to that. And I think that's only gotten worse, frankly, over the years, unfortunately. And so maybe the backdoor way here is what you've suggested, which is you work for a company for a number of years, show that you're a valuable asset, and then look for opportunities at maybe one of their satellite offices. Certainly possible. And I've seen a number of people do that over the years. You get a pretty sweet expat package as a result, but not always. And it may not be in a country in which you want to go work in, right? You may just be sent to some satellite office, and frankly, you may have to do that once or twice before you get a great posting. So it sort of just depends on you.
Thank you.
Hey, Michael, this is Ted. Oh, I got a question. There's another question. When you were referring to the venture that you did, many of the students, they just put together their teams. How many people were on your team, and did you keep the same team together the entire process? And if you did have any team issues, do you recall what they were and what you did to resolve them?
Yeah, so initially we were a team of 2. We gave the initial pitch and it was declined. The idea was did not pass go, did not collect $200. And at that stage, there was another team that had faced a similar issue. So we actually brought on a 3rd member. And again, still very, very close with both those guys, but also, you know, there were 5 or 6 other teams that, you know, that we worked closely with, albeit not on the same end project, but, you know, you'd see each other at the library and so forth, and have remained quite close with them. I don't think there were any issues. I think with us, while at the time there were no engineering students, so everybody was business minded, but we had somebody that was a little bit more marketing focused, somebody was a little bit more management focused, I was a little bit more finance focused, and so you kind of knew where your swim lane was, and you didn't necessarily overlap. Not that there's anything wrong with that. But it's easy to kind of know, well, listen, who's the CFO, who's the CFO or CEO, and so forth, so that you don't kind of step on each other's toes. I think the fact that you guys now have engineers in there, it probably helps a little bit more with some separation. But yeah, if you've got five people that are marketing degrees, clearly, you know, somebody's going to have to do some of the other work, and you may have to rotate. So, and remember, the whole point here is to come out of the program being a very able-bodied individual who can be basically what I call an athlete. You want to be an athlete. You want to be able to literally do anything. And it may not be your specialization, but you need to know enough to be dangerous in any one of these realms in order to be truly effective. So, you know, if you don't get the sweet assignment, you know, the first month, you're going to get it eventually. And frankly, at this stage, you should be doing whatever makes you the most uncomfortable. Because, you know, at 20 years old, you shouldn't be doing stuff that you're comfortable with, because then you're never going to broaden your horizons and exercise new muscles. So that would be my advice.
Hey, Michael, we've got a question from Daniel Frost, who's one of our current NVD students. Daniel?
Yeah, I had a question. What do you wish that people knew more about fundraising earlier in like your career specifically? Do you have any recollections of you like wishing that you knew more about something specific?
Yeah, I think everybody's of the belief that you need to show up in Silicon Valley, rent an office, and walk in the front door at Sequoia and get venture capital from one of those folks. Capital comes in all sorts of shapes and sizes, and frankly, you know, money from your Uncle Pete is just as good as that Sequoia capital early on, and if it's easier to come by, fantastic, right? And so do whatever it takes in terms of bootstrapping. And if anything, I think it's that mentality, the whatever it takes mentality, will help you become much more milestone focused, and presenting your milestones. This is what I did. This is what I'm targeting next. As you hit each one of those milestones, you'll build momentum, and folks with more of an institutional tilt, or those big venture guys, that capital will come around eventually. So you don't need to think that the threshold is so high, the bar is so high that what's the point here? You can start with baby steps and just start chipping away, getting a little bit more confidence, hitting your milestones, and so forth. So again, there's so many different ways that you can raise capital early on. You don't need $1 million to start, right? You don't need, or whatever the number you think you need eventually. There's things that you can do in the interim to help build up. And frankly, I think a lot of investors want to see that you've got that wherewithal and that grit and that gumption to do whatever it takes to kind of get the thing off the ground.
So one of the things that our students are engaging in right now, Michael, we just did the formulation milestone, which is team formation and first venture idea, and we're vetting those ideas currently, but we're immediately going into persona and validation. And maybe you can speak about, validation, how you guys did it, things that you found were valuable, and maybe some of the product validation that you do at Luminar, even though it's on a much bigger scale, but what are some of the techniques that you use to do that?
Yeah, so I would say, with us, we really depended a lot on a patented technology, and knowing that there was some sort of defensive moat around what we were going to be trying to bring to market. And then we knew we were going to have to go out and basically understand where do we fit in the broader market, and acknowledging that it's a pretty big ask for like a Home Depot or a Lowe's or one of those guys to put a new technology or a new product into their, on their shelves. In terms of Luminar, we take a very first principles approach, and I would recommend everybody do this. Take a real first principles approach in how you plan on changing the world or changing your business or adding value. Because if you're commoditized, if you're just another service provider, you're never really going to have a substantial market share. Whereas if you come up with a new solution that truly does solve the problem, right? So map out what are the key criteria that you want to solve for, and then build a product that actually solves that problem and addresses the key concerns of your customer base. There's nothing more important than that, frankly. Whereas I think a lot of people try to find a problem for their solution. I think you need to do it the other way around.
All right, we're open for questions. Ted, I know you have some questions on your list.
Yeah. Hey, Michael, I know that you've obviously been successful over your career, but I'm sure along the way there's been a few unsuccessful moments, and we always talk with the students and everybody, like you learn your greatest lessons in life when you fail. Is there something that comes to mind of a time where you're like, tried this, did that, and man, I learned a good lesson, and what that was?
Yeah, no, that's fantastic. And frankly, it's, you do learn the real lessons in life when times get tough. And, emerging from COVID, and remember just a few months ago that the world didn't look as rosy as it does today. I would remind people that Google emerged from the tech bubble. Uber emerged from the global financial crisis. There will be companies that will emerge from COVID even stronger, right, than going in. Ourselves being one of those, right? I mean, earlier this year we were trying to figure out, what's the cash burn, and in 3 months' time we're going to be a publicly listed company raising $600 million, right? So you never quite know, but it's about just staying focused on the company. Yeah, I think there's a tremendous amount that you can learn when times get really tough. Nobody ever talks about, the great times, but they'll joke about, when they got down to their last $25 in their bank account, right? And had to get really creative. That's when I think you show your real kind of value and worth, and, it's that gumption again.
And whenever we have people in front of students, we always ask this question: what is the best life advice you've ever received?
Probably stay humble. There's always somebody out there that's stronger, taller, smarter, and so forth. And we're all in this together. And I think just stay humble, stay hungry. Maintain that curiosity that probably got you where you are today. I think that's super important. And frankly, lifelong learning, right? just because you're not at Arizona doesn't mean you can't go back and have really informed conversations with people, or get your executive MBA as I'm doing, and or, get certificate programs from INSEAD, whatever. And lifelong learning doesn't have to be in a formal capacity. There doesn't have to be a degree hanging in the background. It can just be exercising, certain creative muscles. So I think that's what I would say.
And you mentioned you're talking to some of your former U of A buddies about investing in something. Can you tell us what that is, or is that super top secret?
No, it's not top secret. It's just, if something interesting has come across my desk, and it's more of just a hobby, sort of investment, but nothing of particular note. It's just something I enjoy. I enjoy being in this capacity and seeing interesting companies come across my desk. And so if I know that those would be of interest to certain folks, then I'm more than happy to kind of flag it. And frankly, a lot of these folks had invested in our current company at some stage. So, it's just about acknowledging there's some interesting ideas out there. And frankly, I've come down to Arizona and sat in on many of those April presentations at the end of the year and seen some phenomenal ideas come across there as well. So it's just about staying interested and curious.
So Mike, I have a question, Ted, for Michael. Michael, a lot of what we do in our programs at McGuire is we teach our students not just to build a business, but how to speak to investors. And it's always like telling that story and getting your kind of executive summary really tight and that message. As an investor, how do you evaluate a company when you sit down to vet something or look at an idea? What are your top things? Is it financial? Is it, have they identified the market? Do they have their TAM, SAM, SOM correct? What are the things that you pick on when you're thinking about this?
I mean, a lot of that stuff is something I can do unilaterally behind closed doors as part of a data room or a diligence process. For me, what is most important is the authenticity, and do they kind of get it, right? Are they solving a problem, and do they come across as the sort of folks that have the wherewithal to actually kind of execute? That to me is more important. The quality and caliber of the character of the individual that's selling it, that's quite important to me, right? Is this the person I would want to work with? Is this somebody that I would depend on? And maybe it is judging a book by its cover, but I think, people who are pretty authentic, are able to convey that authenticity, in the first 5-10 minutes of a meeting. And if you're passionate about something, it comes across in spades.
Yeah, I think we have been focusing a lot on digital content in the program. We're also looking at emphasizing more crowdfunding, and it's a little bit of a double-edged sword, because if you do crowdfunding not so well and you don't raise a lot of money crowdfunding, is that a negative that you have on your back forever? I'm talking about this kind of.
Yeah, I mean, I guess for me, if it's a good idea, you don't need to necessarily throw it up on a crowdfunding site unless it's like a consumer good where you're going to get the benefit of getting more eyeballs on the product itself. But if it's a unique idea, you certainly want to convey some sort of a scarcity element or an exclusivity element of you're getting a unique look at something that's on the up and up. If you're willing to provide everybody with that opportunity, then there's no forcing function. There's no sense of urgency, right? And you'll never close your round as a result. So you also have to provide a little bit of a, insider track to kind of encourage folks, because again, people will take their sweet time. If you're milestone based and you're asking me to invest today, and I get a free look at the deal and just get to wait indefinitely until you hit the next 3 milestones, and I still get to invest at your old valuation, why wouldn't I do that? So there needs to be a bit of a forcing function, before you move on to that next gate.
Michael, I had a question specifically about like the state of autonomy right now. I know that Elon Musk touts that he's ready to be full driving in the next year or so. Where do you kind of see the state of autonomy and the roadmap for that, specifically on the macro scale with Uber and Comma AI and Tesla, and what you guys are doing?
Yeah, so I think what's become very, very clear is the robo-taxi model, in which everybody was assuming by this stage we'd have removed the steering wheel and robo-taxis would be cruising around every major metropolitan area. Turns out that's really hard. It's just really challenging. And frankly, you know, lower levels of autonomy that really relied on cameras historically in what we call ADAS or assisted driving, you know, a camera-based technology is really, really good, but even if it's 99% effective, you can't be hitting, you know, 1 out of every 1,000 people on the road, right? That it's just insufficient level of performance. And so how do we provide a heightened level of performance for operating domains that are frankly much more realistic within the time frame that we're talking about? And as a result, we're much more focused on highway autonomy. It's just an easier operating domain, go straight and don't hit things. Whereas in a dense urban environment, a lorry could be parked on the side of the road, person could be walking across the street, not at a crosswalk. It just, there's a lot of what we call edge cases. And unfortunately, you know, cameras only see the world in 2D. And even if you kind of put them in stereo and have a little bit of a triangulation, maybe you get some depth variable, you don't get precision around that depth variable, which is what's required. And frankly, driving a car is not difficult, left, right, stop, go, but you do need to have impeccable awareness of everything that's going on around you. And it's that X, Y, and the Z coordinate, the depth coordinate, that are tremendously important to inform your software team and your machine learning guys to actually build a product that works. Furthermore, if you don't see something, it's pretty hard to make decisions around it. And so a lot of these other sensing systems, they either don't see the product because maybe in the case of cameras, you know, the white lorry truck that you just ran into looked too close to the sky, or, you know, it's too far beyond, you know, what a system can see. And so as a result, if you're moving at 30, 40, 50 miles an hour, you didn't have sufficient time to stop. So these are all things that we've solved in rolling out what it will be the first autonomous consumer product. Volvo is launching that in 2022. And so that was publicly announced in May. And frankly, we're thrilled to have them on as an investor. I brought them in late 17, early 18, and they've been a tremendous partner all along. But they've been lean and mean and really focused. And I can't say everybody else has been the same. So you have to have a really focused approach. But again, while everybody's out there chasing butterflies in a field, trying to solve full autonomy in urban environments, we're focusing on what's achievable in the near term, and that's highway autonomy. Just a much easier problem to solve, frankly.
Will this be on what type of Volvos in 2022?
Yeah,
Volvos?
Yeah, initially the XC90, but as is always the case with new tech, it's always going to be at the highest trim level for the, you know, the flagship vehicle, and then over time it gets cascaded down into more economical models. So, you know, again, the first launch is in 2022, small volumes, and then you'd hope to see that ramp over time. But tremendously exciting. I mean, the fact that that Luminar was the first one to actually deliver this level of functionality, this sort of product, and the fact that we've got this in 2022 within the near future, I think it's just fantastic. And it's going to prove out the thesis. Volvo could not be a better partner. You know, quite frankly, they were the launch customer for Mobileye. They were the ones that introduced the 3-point seatbelt harness. They're the name that's synonymous with safety. I mean, you know, you could do a lot worse than partnering with Volvo.
Do they have any sense of how much it's going to increase the cost of a car to the consumer, or do?
Yeah, I don't think they've announced that, but it's probably on the order of where other sort of higher end sensing technologies are. Let's call it mid-single digit thousands, which, you know, is reasonable for a car that costs 70 grand, you know, that you would pay, you know, some portion of the population would pay a premium for that option. Now, if you put a $5,000 option on a $25,000, you know, economy vehicle, the take-up's clearly going to be substantially lower, and that's a more meaningful expense to somebody who's paying that 25 grand for the car in the first place. So again, you always start at the luxury vehicles, and then it cascades down into more economical models.
So you personally have ridden in a vehicle that's using autonomous driving technology, correct?
Yeah. So we're creating the key LiDAR sensor and associated perception software, right? Today, we're not creating the whole car, right? There are some companies out there like Zoox that are creating an entire vehicle from scratch. That's just a big lift, right? It's taken us hundreds of millions of dollars and hundreds of people and many, many years to develop just key components, let alone trying to develop an entire car. Remember, building a car is a big challenge. You've got, you know, 10,000 to 50,000 hour duty cycles. You know, you still see a 1988 Pontiac driving around there on the road. Like, you need to build a car that can withstand those sort of duty cycles and be on the roads for all those years and not have any of the safety characteristics significantly diminished, right? So everything has to work for years and years, and there's warranty issues and all that. So making an automotive grade product, it goes well beyond just designing some cool tech.
I'm wondering, I've never driven or ridden in a vehicle that's, you know, being self-driving, autonomous, whatever. What's the, just wondering, like, when you did it, or if anyone else, if you in the chat room say if you've done it, what's the psychology of sitting there going, man, I hope this works? Or is there anything that's different than getting in a plane?
Yeah, well, today, most of these cars are, there's either countless folks that are telepresencing in, like if it's a robo-taxi, you know, you may have a backup driver, and you probably have a few people that are watching in from afar vis-a-vis video that have, you know, the ability to either stop the car or control it from afar. So there's a little bit of that today. We're going to be launching a consumer product in which you, the driver, once you navigate your way to a highway, then it goes into autonomous mode for highway settings. So you would still sort of drive the car. It turns into like a super duper cruise control once you're on the highway, where you can read a book and text message and so forth and have complete safety.
The Phoenix to Tucson Volvo is
That's
what's
right.
needed. Man, there's not a better road for that.
Yeah, listen, there are companies down there, actually even in Tucson. I think Too Simple is an autonomous trucking company. They're testing there in Tucson. The former dean of the engineering program, Larry Head, oversees the Anthem DOT project up in Anthem, Arizona. So there's a lot going on in Arizona. Clearly, Waymo is there in Chandler, I think, and Cruise is in Chandler. So there's a lot going on in Arizona. Frankly, a lot of it is big, wide open freeways. You don't have a lot of trees and foliage, and frankly, you don't have nearly as many people as you have in some of the other dense urban environments. So it's big and wide open. And so that's why people are able to test there. And it's much more liberal testing environment as well.
Yeah. Alyssa, apparently, she put in the chat room that she got to experience karaoke, singing while riding in a Tesla.
That's right. One of my friends has a Tesla, and we were driving from LA to Santa Barbara, and she doesn't like highway driving, but the Tesla does. So the Tesla was driving us while we were eating breakfast burritos and doing karaoke, which is one of the updated options on the entertainment platform for the new Tesla, which is very cool.
Yeah.
I think we found a marketing strategy for Volvo.
Yeah.
The
Exactly.
karaoke compliments of Alyssa Billfield.
It's a really important feature, I think.
Exactly.
Hey,
So
Mike. Oh,
Go ahead, Caden, you have a question?
oh yeah. So, when you're doing like self-driving cars, it has to be like or have you guys tested like different weather types, like in the rain or wind? Do you guys take into consideration of that, or how do you guys go upon that?
Yeah, no, that's a terrific question. Yeah, I mean, you have to almost overspec your system so that it doesn't just drive on bluebird days in certain environments. You need to be able to navigate, you know, all of the different weather environments and times of day, right? And so a lot of the camera-based technologies have difficulty with that, right? Saturation when you're driving under a light at night, or sun shining right into the system, that can present a challenge. LiDAR, which is what we've developed, does not, certainly not the LiDAR that we've developed, has none of those issues. So we create our own active light. We see just as well at night as we do during the day. There is no interference from solar, sunlight, or other LiDAR, and that's really imperative. And you also have to be able to see through rain, fog, and snow. Now, we can punch through a lot of that stuff because we've overspec'd the system, but you have to also remember a lot of other folks are going to be on the road driving cars that don't have the same technology. And so you're going to be navigating an environment which has also got some other challenges, right? And some other unknowns as to how they're going to react in certain climates and certain environments, whether it's on ice or otherwise. So there's a lot of decisions that one needs to contemplate when building out the neural networks and machine learning algorithms.
Mm-hmm. And then like for it just popped in my head. Whenever there's like driving in the dark, can't you just put increase the what is it, the filter on it, so the picture for the CNN just can actually look at the picture and analyze it and just do it that way, if that makes sense?
Yeah, I mean, we use LiDAR. So we send out our own pulses of light. And for those that aren't familiar with LiDAR, if you've ever played golf, a golf rangefinder is a LiDAR. You're sending out a pulse of light. We know the speed of light. We know how long that pulse was gone. And so when it comes back to the receiver, we can calculate the distance. We don't just do that one time. We do it 600,000 times a second, and it creates this very pixelated image of the world. And so that's what's quite unique, and that's what gives you that real-time 3D map of the world. And because we're our own light source, we sort of emit that. Now, certain other companies within the LiDAR space, they have a wavelength of light that's pretty close to the visible spectrum. And so if they put too much power behind that light, that laser, it'll actually damage people's retina. And so the FDA has really hard limits on the amount of power people can put behind those types of lasers. We don't face that issue because we're in the eye-safe region using what's called 1550 nanometer.
Okay. Gotcha. Thank you.
So Michael, we're coming up.
Questions.
Anybody-
Oh, sorry.
Go ahead.
Quick question. So you mentioned the Z. Do you know like what accuracy you're working with in terms of inches?
Yeah, I mean, we can see out well beyond 250 meters. And of course, based on the points per square degree, the resolution metric, clearly out at that distance, you need to get a number of points on an object of a certain size. So we want to be able to identify a car at 250 or 300 meters. You need to get, let's call it 7 points on that object to be able to say with confidence, all right, we've seen this 1,000 times. We know that that is a car at 250 meters. And as you get to 200 meters a second later, you now have 15 points on that object, and you have heightened confidence, right? Probability detection and heightened confidence as to what you're seeing. So, the precision element is important, as is the depth element. I'm not sure if I've addressed your question.
Yeah, for the most part. So right now, we work with drones using photogrammetry, and we're at about 3/400ths of an inch.
Yeah.
And we're looking into LiDAR because we know that it really will revolutionize the mapping industry. But all the technology right now is about $50,000 or more.
Yeah, and a lot of our tech and a lot of our staff, we've got about 1,000 years of LiDAR expertise on the team, was all born out of military. It all came from, the old Lockheed, missile ranging tech that was used. And frankly, a lot of that, they were never as focused on the cost component because frankly, you just pass that bill along to the government and they cover it. Whereas now, if this is automotive and you need to have a couple $1,000 device, your cost needs to be substantially less than that in order to have a business. And so we're now at a point where we're ramping up volumes, and the cost component and driving down that bill of materials is a huge part of it. For your use case, depending on the drone, we're making an automotive product, which I'm sure there's some overlap in what you would find tremendously useful, but we're not building a product for the drone market. We're building a product for the automotive market. They're just different criteria, but listen, more than happy to have a conversation offline.
I'd love that. Do you see Luminar going into drones anytime soon?
I mean, we are already actively involved in a number of adjacent markets. We don't talk about it because we don't want to come across as unfocused, but we focus on robotaxis, trucking, consumer vehicle, as well as aerospace and defense, construction, mining, agriculture, and so forth, smart cities. But automotive and trucking are $1 trillion markets. A lot of those other adjacents are, I don't want to sound flippant here, but $1 billion markets. And frankly, it would require a little bit more bespoke design work for our product in order to kind of, meet your criteria. It may not make a ton of sense.
Right. Thank you.
I think we need to wrap things up here.
So Michael, quick last couple of questions. They're University of Arizona related. One, did you ever live on campus? And if you did, what dorm did you live in?
Yeah, I was a Manzanita Mojave guy, room 346, across from Los Betos, although I think the Los Betos is gone now, sadly. And then I lived in the Delta Tau Delta house on just north of Drockman there, and then we were on Cherry across from Gamma Phi, and then lived over on Columbus and 4th.
Nice. So you're a Manzi Mo. You started out there.
Exactly. Yeah.
Was the place a dump back then?
You know, it was. I think it was mid-century modern is the way I would term it.
Okay, then the last U of A question. Were we good at basketball when you were a student?
Yeah, and I still hold a very, you know, warm place in my heart for Lute Olson. Sad to see him go. It was amazing to be there. I was there 99 through 03 when I think we went to the Final Four twice, and it was just outstanding. You know, Steve Kerr, who was well before my time, but you know, it was the Kerr era that kind of led in all of that sort of fandom around U of A basketball. He's now the coach at Golden State Warriors, and frankly, I heard him speak very recently. Actually, it's a tremendous story, and I don't want to bore you guys, but my wife used to mention this Dr. Kerr, when we were dating, and I never put two and two together. And one day she sees Steve Kerr on the screen coaching the Golden State Warriors, and she's like, you know, Dr. Kerr, I think he's related. Turns out her family in Beirut, Steve Kerr was born in Beirut, and the grandfather was the professor of chemistry at the American University in Beirut. Turns out the grandfather's the one that processed all their paperwork to get them into the United States, and just a tremendous story. So we went and saw Steve Kerr speak at the Armenian school here in San Francisco, and just a tremendous individual and amazing character, and he's a huge U of A supporter. But yeah, I mean, I still follow a lot of those guys, many of which, like, you know, Luke Walton is now, you know, now a coach in the NBA. He was there when I was there. Richard Jefferson, Gilbert Arenas, who else was there? Lauren Woods, Channing Frye. I mean, all of these guys went on to have tremendous careers in the NBA. It was just a ton of fun being there then.
I wish they were as good. Those were the good old days.
Yeah, we'll get back.
Exactly. Well, that's our time. We're a couple minutes over. So I just want to say on behalf of myself and the center, thanks for your time today. I'm sure the students appreciated it. I know I did. So as far as if the students wanted to reach out to you, we'll have them reach out to myself or John or one of the mentors, and then we would direct them to you.
Yeah, just find me on LinkedIn, and that's probably the easiest way, frankly.
Okay. All right.
Thanks so much, Michael.
This session was supposed to be recorded, and I think somebody said it was. So
yes.